Hope you're having a great day out there. We want to thank you so much for joining us, spending part of the day here on Aspire to Retire with Ralph and Tim Short of Welcome Home Financial Partners. You can find them online, find out more about the team, set up a time to speak with them at welcomehomefp.com. We've made it real easy for you. The link is right there in the podcast description. Just click on through. It'll take you right there where you want to go. Find out more about the team, the First Friday events they do, all the events, and continue the education beyond here on the show in person with them, setting up a time to speak with them. My name is Chris Swan, and I'm pleased to be joined, as always, by the father-son team behind Welcome Home Financial Partners, Ralph and Tim. Glad to be with you as always. How you doing?
Fine. How are you, good, Chris? How are you,
doing really well. You know, the holidays, the hustle and bustle of the holidays always get swept up. The balance for me, my son's birthday is the day after Christmas, so that's always fun in and of itself. But we're not here to talk about that. We're here to talk about finances, getting people thinking more seriously about that. And so the election, thankfully, in the rearview mirror. But in the weeks following the election, the stock market, it was going up 200, 300 points a day. Trump bump 2.0 was in full effect. And then Trump made his first announcement about the plans for tariffs on foreign products, not just on China, but 25% on Mexico and Canada as well. The market didn't really like that. It took a 300-point drop. It did bounce back, but I have to wonder, is this a preview of the volatility we could be seeing in 2025 and the years to come? And how concerned should people that are getting close to retirement with a lot of money tied to the market, how worried should they be about this?
Well, I think everybody should be somewhat concerned, right? I mean, I know we can all say the same thing. We are happy that the election is now behind us, right? So, but yeah, I mean, you've seen some volatility in the market as of late, and that's kind of always the case, right? But we're entering a new regime, if you will. There's going to be different things rolled out, whether we agree with them or not. So there's going to be change. Anytime there's change, you're going to see volatility in the market. So people, as they're approaching retirement, should take that into consideration and kind of de-risk their portfolio, if you will, because there's always going to be volatility. I mean, if we look at this year, we had a couple really bad months, but overall it's been a really good year, right? So even in a good year, you're going to see volatility. So as you're approaching retirement, it's really time to take a look seriously about how much risk you have, how much exposure you've got in the market, because the volatility with the tariff talk, if you will, it's going to be there, right? I mean, I know the president of Mexico kind of fired back and said that there was going to be some tariffs placed on us. So it's not just us that we have to be concerned about.
And what I would say also is volatility can be your friend, but it's not when you get close to retirement or in retirement.
Right.
If you're young, you buy the dips, okay, and you don't really have to worry about it because you don't have any use for that money at that point in time, because if you have all your money in your 401k, you're not able to do anything. But when you're in retirement, let me just ask you this question. If you had $500,000 in the bank and somebody came in and took half of that away from you, how would it make you feel?
Not great.
Probably not great. But at the same time, that's what you're going to use to pay your bills and do the things that you want to do and dream about all your life. So that's why you need to kind of take a look at taking your risk down a little bit. And what I mean by that is just saying, hey, what part of that money do you need today versus what do you need 10 years from now? So the 10-year bucket, if you want to call it that, is long-term. So you probably could stay some in the market, but the money that you're going to need over the next 5 years, you need to make sure it's going to be there. So that's why you need to take a look at where you got your money, how is it allocated, and for the purpose of that money. And that's the biggest thing we talk to people about is what is the purpose of this money that you're going to need? How much are you going to need on a daily basis, monthly basis? And at that point in time, develop a strategy and an income plan, because that's the most important thing when you're in retirement. Because I don't know about you, Chris, but my bills is not going to stop when I retire. No. What about you?
No, not at all. And I don't think, the power company or the grocery store is going to care if the markets are seeing a downturn or a dip. They still want to, receive their what they're entitled to, their payments.
Oh, absolutely. And I think, it's not just about the financial market, but it's just the job market too, right? Mm-hmm. So if the new president comes in and starts deporting folks, what's going to happen with the job market? So there's a lot of things to take into account. And I think everybody's gotten a little bit too emotional now, especially with the presidential election and politics, and cutting on what news channel they're telling you one thing, you cut it on the next channel, it's telling you something completely different. So I think it's really important to focus in on what we can accomplish with your portfolio, and not necessarily looking at, okay, hey, this is what they're trying to roll out. We don't know if it's going to end up rolling out or not. So it's really important to focus in on what you can control.
It's that speculation that you want to be wary of. We've spoken before about the the markets, the TV channels, the financial channels, and things like that, and how it's almost their job to be contrarian or controversial just for the sake of, generating viewership and things like that. And here's the truth of it, is that they're focused largely on the investor, on the accumulation side. And as we've pointed out many times here, as you enter into retirement, it's no longer about the accumulation, but the preservation, the distribution. So yes, there is some merit to paying a little attention to the markets because the growth potential can't be discounted. But Ralph, as you just said there, the purpose of your dollar, the first time I heard that phrase, it struck me as funny. I was like, well, it's to buy things. That's what it's for, right? But you bring up a good point. There is the purpose of the dollars that you have for the next 5 years are certainly different for 10 years from now, 15 years from now. So you can have different risk allocations set up where you can have money in the market 15 years from now. You can let the ups and downs handle that. But for the more immediate future, you do want a bit of stability, perhaps something a bit more risk averse. And I don't know, how often do you guys have that conversation with people where, that light flicks on with them, where they suddenly understand, oh, you're right, I don't have to have it all or nothing one way or another?
Well, more than likely, most people have never heard that expression before or understand it. But once they hear about that, you see their light bulb all of a sudden shine over their heads. And they say, oh, yeah, I understand that now. Nobody's ever said anything like that to me before. But I would also say that, the emotion side is very difficult to get over because a lot of people will talk to their neighbor. Neighbor would say, oh, man, I've got, 25% return this year. What about you? And it's almost like, I'm going to outdo you. What can I do? And you kind of get into a rut at that point in time, but you have to understand what it is that you're trying to accomplish, not your neighbors, not your coworkers, or anybody that's on TV that says, oh, this is what we can do for you. But I think the biggest issue for most people is understand what your priorities are, understand your goals. Then that's when we come in as fiduciaries and say, all right, based on what you want to do, not what I want you to do, but what you want to do, this is what I would recommend, and explain why the reason for what they're recommending to, not just because I'm the guy that you're supposed to listen to. It's you need to understand it. You don't need to understand everything, but you do need to understand why it's important that you do this for your goals and your priorities. Would you agree, Tim?
Oh, absolutely. And I think that's the most important piece of this is everybody's going to be different, right? Everybody sitting at this table is different. Everybody out there listening is going to be different. You could have $1 million, but have terrible spending habits. And next thing you know, you're going back to work, right? So that's the issue at hand is everybody tries to compare and contrast to, hey, my friend's doing this or my brother-in-law did this. Instead of, okay, well, let's really sit back and take a look. Maybe your brother-in-law wants to go travel to Italy every other month, whereas you just want to drive down the street to Virginia Beach, right? So it's completely different. And I think everybody just gets roped into following the masses because there's a lot of mass communication out there of what you should do and what you shouldn't do based off what channel you're watching, right? And I think there's so many folks that kind of crave the drama or the emotional aspect that they listen to those stations like, oh, wow, well, I should really be doing, maybe I need to invest in gold now. There's so many things out there that how are you going to take advice from somebody that doesn't know anything about you?
Right.
And I think that's what's often overlooked.
And I would also say on the gold side, I give you an example. A gentleman came in, had saved up $2.5 million, which seems like a pretty good sum of money, right? Wouldn't you agree, Chris?
Yeah, absolutely.
I know you got that in your back pocket, right? But anyway, he came in and said that his goal for retirement was him and his wife wanted to spend $20,000 a month on travel.
Wow.
And travel only. And I kind of looked at him and he said, I know I got plenty of money. I don't have to worry about this or worry about that. I'm like, listen, let's just take a look at that from a common sense standpoint. And that's kind of our approach is let's use some common sense, not emotion, but common sense to accomplish your goal. I said, that's almost $250,000 a year just in travel. That's not counting anything else that you're going to have to do and pay your bills, mortgages, and things like that. And all of a sudden, I said, how long is that going to last? I said, just on the principle, not even considering any volatility, you will have about 10 years, and that's it. And he looks at me and goes, oh, my God, I hadn't thought about it like that. You're right. So, that's the kind of thing that we sit down and help people understand the ramifications of what you're about to do, either near retirement or in retirement. Because all of a sudden, let's say that somebody, your child comes in because he lost his job and needs to stay with you for a while because he lost his house or whatever. I mean, how's that going to affect your cash flow? More than likely, it's going to increase, or they need to borrow some money from you. Mm-hmm. How's that going to affect you down the road 5 to 10 years from now? So, Tim, just understand what I'm trying to say.
I was going to say, you were looking right at him the whole time.
You never want kids to pull you down.
That's right.
When it comes to keeping up with the Joneses, holding yourself up to your neighbors, your coworkers, things like that, unless your last name is Jones, don't do it. And when it comes to the financial channels, we've talked about this before. You want to make sure that you bear in mind, if they get it wrong, if they give improper advice on the air, they're speaking to the masses. They're giving very generalized terms. There's no ramifications for them if they get it incorrect. Whereas if you're sitting down with someone personally, if I can editorialize, like the team at Welcome Home Financial Partners, if you sit down and speak with them, you're going to get that customized approach. They're going to get to know you. They're going to start developing that plan with you, and they're going to educate you and let you make the best decision as you see fit based on the information they present with you. So if you are concerned about the volatility, not just going into next year, but the years to come, if you want to find a way to dial back some of that risk when it comes to your retirement, and I think that's certainly worth taking a look at. All you need to do is set up a time to speak with them. Is reach out to the website, welcomehomefp.com. As I mentioned earlier, it's right there in the podcast description link. Just click that, it'll take you right there. Find out more about them, set up a time to speak with them. It is complimentary, and I think it'd be a great way to kick off your new year, taking a better stance of your financial outlook. Going to go and make that New Year's resolution for you. So again, welcomehomefp.com. Visit them. They'd love to have the chance to speak with you guys. We want to thank you, as always, for joining us here on Aspire to Retire with Ralph and Tim Short. Guys, appreciate the time, as always. As we wrap up this episode, I want to leave you with the final word.
Oh, thank you as always, Chris. So yeah, if you're listening to this and you are nervous about, 2025, the new president, whatever, if you're worried about the volatility and you're looking to retire in the near future, give us a call, visit our website. We'd love the opportunity to bring you into the office or attend the First Friday event or maybe one of the other events we do around the area. So give us a call. Thanks for listening and take care.
All content is for information purposes only. It is not intended to provide any tax or legal advice or provide the basis for any financial decision, nor is it intended to be a projection of current or future performance or indication or future results. Opinions expressed herein are solely those of Welcome Home Financial Partners and Welcome Home Wealth Advisors, LLC. The information contained in this material has been derived from sources believed to be reliable, but is not guaranteed as to accuracy and completeness and does not purport to a complete analysis of the materials discussed. All information and ideas should be discussed in detail with your individual advisor prior to the implementation. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstance. Advisor services are offered by Welcome Home Wealth Advisors, LLC, a registered investment advisor in the state of Virginia. Being registered as an investment advisor does not imply a certain level of skill or training. Insurance products and services are offered through WPI Holding, Virginia Insurance License Number 138509, an affiliated company. The information contained herein should in no way be construed or interpreted as a solicitation to sell or offer to sell advisory services to any residents of any state other than the state of Virginia or where otherwise legally permitted. Welcome Home Wealth Advisors, LLC, and Welcome Home Financial Partners are not affiliated with or endorsed by the Social Security Administration or any government agency.